If I tell you that central banks across the world are the reason why gold has become so expensive for you and me, what will you say? But that's a fact. Ladies and gentlemen, central banks across the world have single-handedly driven up the prices of gold. And not just one central bank, but many. From RBI to People's Bank of China, to the Central Bank of Russian Federation, to Poland, Kazakhstan, Turkey, Czech Republic, and many others have been the biggest buyers of gold in the last few years. They have surged the demand of the yellow metal. Hello, and welcome to Wait, Let Me Explain. Now, sample these numbers. Central banks purchased a substantial amount of gold in the last 5 years, with over 3,200 tons of net purchases in the 3 years between 2022 and 24 alone. Yes, exactly after the war in Ukraine. In August 2025 alone, central banks added 15 tons of gold to their reserves. More recent data shows continued strong buying, with over 1,000 tons purchased annually since 2022, though activity slowed in the first half of 2025 due to geopolitical factors. But here's the game changer. For the first time since 1996, central bank gold reserves have overtaken holdings of US Treasury securities, which means gold has overtaken the dollar as a security asset in central banks. According to the World Gold Council's latest survey, central banks expect the upward momentum in gold prices to continue over the next 12 months, which means your gold is likely to surge much more in the next 1 year. Currently, gold accounts for around 27% of the total central bank reserves, while treasuries stand at roughly $4.5 trillion. According to data from the World Gold Council, central banks worldwide have nearly doubled their gold holdings over the past decade, signaling confidence in the yellow metal. India in particular has steadily increased its reserves amid a volatile global backdrop. This year, gold prices have risen more than 60%. From January 2008 to August 2011, gold prices increased by 100%. Similarly, between January and August 2020, gold prices rose by approximately 53%. Now, if you see these surges, ladies and gentlemen, you'll realize that when geopolitical instability and economic uncertainty rose, so did gold prices and gold demand. This also reflects the growing mistrust with the US dollar and American government's inability to pay back its $36 trillion debt, which is also rising. By the way, recent data show that countries with geopolitical allegiance to China and Russia have sharply increased their gold reserves since late 2021. The trend accelerated after the G7 froze Russia's foreign exchange reserves following its invasion of Ukraine. Moscow responded by ramping up gold purchases, helping drive global demand higher. And there's a history to it as well. Before 1971, ladies and gentlemen, the dollar was linked with gold, which meant one could get gold in exchange of the dollars they had. But in 1971, Richard Nixon, then US president, de-linked dollar with gold, and the dollar became an independent, free-flowing reserve currency of the world. Before the 1970s, gold made up as much as 75% of central bank reserves. Over time, that share fell significantly, but the recent wave of buying suggests a potential return to those levels. Now, if this trend continues, sustained demand could keep pushing gold prices higher, reinforcing its role as the world's ultimate safe haven asset. But the loser here is the consumer, you and I. Now sample this. While central banks do bulk buying of gold in tons with large amounts of reserve cash they have, retail consumers or individuals on the other hand, like you or me, we have to buy in grams. There's a growing debate on whether there should be a different rate for individual buyers, individual people, and sovereign institutions like central banks because they are the ones who are driving up the prices. But ordinary people also have the right to buy gold. Should the rate be similar for both? That's a thought to ponder on. Central banks have been guzzling away gold, and they are the sole reason why gold has surged so much because they're the only reason why demand has surged so much. If you found this video informative, make sure to like, share, and subscribe to Wait, Let Me Explain for more deep dives into economics and finance. Stay tuned for more golden updates.